Hey there, everybody. Thomas with Basecamp Trading. It is Monday, December 4th, and we're going to take a look at one of the trades from the trading room this morning. I had a few different opportunities we're looking at: BBIO, AMC, GameStop, and a couple different ES trades, as well as crude oil and gold. But the one I want to focus on here and talk about a little bit is GameStop. So one of the things we do in the trading room here at Basecamp Trading is we look for what we call multi-time frame analysis. So we get a bias, a direction we want to be trading from a higher time frame, because the bigger the time frame, the bigger the expected move. Then we go from that bias and we drill down to another time frame to time our entry. So we'll go from a higher time frame for direction and then a lower time frame for an entry. So what we were looking at, for example, at GameStop, first thing this morning we came in and we said, based on our dailies, we were bullish. This is what we call a bull flag setup. So we push higher on strength with volume, put in lower highs, and then as soon as we break previous daily high, we have an expectation of it to surge back towards the previous highs here, which it's done. But with that being said, when we drill down here, intraday on a 5-minute, this is where our entry was on this 5-minute hammer. So we had the bias of looking for this bullish pattern to trigger, and we wanted to find an entry. And right in the first 5 minutes trading, we got that set up for an entry. So we had pivot lows from Friday down around the $15 level that were acting as support. GameStop broke through that support, immediately reversed, pulled right back up, and closed with a really nice hammer here. So our entry in GameStop was on the break of that hammer's high at around 1545, 1550 area. Then if you recall, our targets today were around 17. So we ended up hitting our targets here recently before pulling back, but ended up playing out really, really well. Our initial entry, again, 1550, with stops down around the 1490 level, just below the low of that hammer. And then we get the nice surge up, and we were scaling on the way up here. So overall played out really well. But this is an example of how we find better reward risk ratio trades. Because in order to get that really strong reward risk ratio where we can have a tighter stop but have an expectation of that setup moving further, is we do multi-time frame analysis. So keep that in mind next time you're looking for an opportunity. What's the higher time frame telling you? Because the bigger the time frame, the larger the expected move. All right. So that's it for today. Hope it helps. Don't forget to like and subscribe. And tune back every day. We try to post updates on what we're doing in the trading room, how it works out, and kind of explain a little bit more about how to find these setups. Hopefully give you some quick content that can help you on your trading journey. That's it for now. And until next time, everybody, happy trading.